Welcome second PU Commerce students to Exam Tips and Tricks channel. 2 marks important questions. What is average profit method of valuation of goodwill? Under this average profit method, the given number of years of profit or loss are averaged, and average profit is multiplied with the agreed number of years of purchase to ascertain goodwill. Average profit method is one of the method for the valuation of goodwill of the firm. Under this method, the given profits or loss that has to be considered, that must be divided with number of years of profits or losses. So average profit that has to be calculated, which must be multiplied with number of years of purchase of goodwill to find out goodwill under average profit method. Formula to calculate goodwill and average profit method, that is equal to average profit into number of years of purchase. Average profit in the sense total profit divided by number of years of profit, or loss in case if loss is given, that has to be deducted. Profit is given, that must be added. Average profit or loss that has to be ascertained, that must be multiplied with number of years of purchase. Let's consider one example. Goodwill of the firm is valued at 2 years purchase of average profit of last 4 years. That is given as rupees 40,000. You are asked to calculate goodwill of the firm under average profit method. So goodwill is equal to average profit is total profit of last 4 years divided by number of years. So 4 years profit total is given as 40,000. Number of years of profit is given as 4. So that must be divided. 4 has to be divided in order to find out average profit. So 40,000 divided by 4, that is equal to 10,000. So the formula is average profit into number of years of purchase. 2 years purchase is given, that has to be multiplied. So the goodwill, that is equal to 20,000. Journal entry for increase in the value of building on admission of a partner. So when a new partner is admitted into the partnership business, it is required to prepare revaluation account, partner's capital account, as well as reconstituted balance sheet. It is very important to find out whether there is increase or decrease in the value of asset, increase or decrease in the value of liabilities. These assets and liabilities that has to be revalued. It has to be disclosed in a revaluation account. Increase or decrease in the value of assets as well as liabilities, that must be revealed in a revaluation account. So the journal entry for increase in the value of asset. Building is one of the fixed asset. If the value of asset increases, then the journal entry will be building account data to revaluation account. So revaluation account is one of the ledger account. Under this ledger account, it has to be credited with building account for the increase in the value of building. So the narration will be increase in the value of building. Journal entry for decrease in the value of a liability on admission of a partner. If the liability of the firm decreases, then the journal entry will be liability account data to revaluation account. So under the revaluation account, it has to be credited with liability account, decrease in the value of liability. So the narration will be decrease in the value of liability. Journal entry for decrease in the value of asset in case of admission of a new partner. So in the revaluation account, the increase or decrease in the value of assets as well as liabilities, that has to be disclosed. Finally, a profit or loss on revaluation, that must be ascertained and it must be distributed. If there is a profit on revaluation, that must be distributed among all partners in their old ratio. If there is a loss on revaluation, all partners are held responsible for the loss on revaluation. Finally, revaluation account has to be closed by the way of transferring profit or loss on revaluation to all partners' capital account. If there is a decrease in the value of asset, it must be debited to revaluation account. So the journal entry will be revaluation account data to asset account. In the revaluation account, this decrease in the value of asset, that has to be debited. So the narration will be decrease in the value of asset. Journal entry for goodwill brought in cash by new partner. When a new partner is admitted into the partnership business, new partner may bring the amount of goodwill in the form of cash. As he brings goodwill in the form of cash, then the journal entry will be cash account data to new partner's capital account. In the new partner's capital account, it has to be credited with cash account. Under new partners column, what is the amount brought by the new partner as a goodwill, that has to be disclosed under new partners column. So the narration will be goodwill brought in cash by new partner. Journal entry for transfer of loss on revaluation. So when revaluation account is prepared, there can be either profit on revaluation or a loss on revaluation. For the profit as well as the loss, all partners will be held responsible to get the share of profit on revaluation. Also, all partners are held responsible for the loss on revaluation. It can be closed by the way of transferring this profit or loss on revaluation to all partners' capital account. So the journal entry for the loss on revaluation will be all partners' capital account data to revaluation account. If there is a profit on revaluation, then revaluation account data to all partners' capital account if there is a profit on revaluation. So the narration will be loss on revaluation transferred to all partners' capital account. Thank you.